In today's video, we're going to be looking at the RBA and policy decisions and options they've provided us, as well as looking at what's going on with the unemployment rate in Australia and a little bit on a couple of shares across in the US market. Hello and welcome to another ACY Securities Hot Topics video. My name is Alistair Schultz and I'm going to be your host through today's trading journey. The first thing I'm looking at today is the announcement we heard from the Reserve Bank of Australia. They basically listed out some of the options that they are considering for monetary policy over the next couple of years. Now, at this stage, what was made very clear was that rates are going to stay low until inflation gets into a 2 to 3% range. Of course, that also coincides with roughly a 2 to 3 year target period. Now, looking at what's going on in the bank, they've talked about the idea of potentially buying more bonds to try and supplement the 3-year yield targets they existingly have. They also speculated on the idea of buying 5 and 10-year bonds just to see if it would do anything, but they're skeptical that it's actually going to help grow the economy and make more jobs. The next one that they thought about was currency intervention, but they've also noted that it's likely not to be all that effective, purely because they're just not quite sure with the current market environment if it's actually going to make any difference for them. The other ones that they have are ones that we always speculate on, and that is whether they're going to lower the existing interest rates and the structures around them, and whether or not they're going to go sub-zero. So they're the 2 points that they've really been discussing at length. Obviously, bond purchases is right up there as well. What are we going to see at the next meeting? I doubt we're going to see any rate cuts or changes in the November meetings. We will likely, however, see some of this trickery being done around the bond programs, with them trying to expand them just a fraction to see if it does make any new jobs for the Australian economy. Now, moving on from that, we've also heard about unemployment figures today at about 11:30 Australian Eastern Standard Time. The participation rate has decreased to 64%. That's not something we ideally like looking at. If you've got less people in the workforce and actively looking for jobs, then it does kind of inflate the figures to show that, oh, look, we have a better unemployment rate. But that's only because people are not participating or even bothering to look for a job. The unemployment rate did rise to 6.9%, only a 0.1% rise after a forecast for 7%. So that was better than expected. But again, it's really not that much of a difference. 0.1% makes very little in this game at the moment. The underemployment rate has also increased to 11.4%. So that indicates that there are a number of people who have gone out and gotten jobs, but it's not enough to support themselves. So that might mean they've gotten part-time or casual work and not full-time employment. Of course, the number of employed persons increased by 29,000. Again, taking a deeper dive into those figures, we can see that there is a mix of part-time and full-time work in that. They're not all full-time jobs. So that is something we have to consider when we look at what's going on. Now, earlier in the session when we heard from the RBA, we did see a reasonable drop in the Australian dollar. And since then, price has been pretty sideways. At the announcement of the unemployment rates and employment change figures, we saw price sort of bounce around a little bit. And right now, investors are kind of taking a peek and waiting and just thinking about what some of those implications might be. So I wouldn't be at all surprised if we see a bit of a breakout later today. Now, looking at some of the stocks I was talking about, I'm focusing on software here a little bit more closely. A company called Fastly Incorporated has seen a 500% growth this year and is one of the best stocks of the year, really, in my mind. Now, what's gone on recently is they lost 28% in late trading yesterday. And this has caused a domino effect into a number of other finance and software-focused enterprises. The first one is the reason it all happened was because their revenue expectations were below what we were expecting for them. We were expecting to see figures a little bit higher than what they were. And unfortunately, this domino effect has rolled over into Akamitech, Datadog, and Cloudflare, who have all lost or slipped at least 3% each in their share prices. Now, this is saying to me that investors are starting to worry. They've gotten into lots of tech and lots of software options throughout the pandemic because we've seen it coming up. And now in this third quarter where the revenue is not continuing to grow, in some instances it might be just staying stable or even a little bit less than what we saw in the early March area. So that is going to give people a little bit of concern that perhaps they're not going to be growing as fast as they'd hoped, and that perhaps the valuations have come a little bit too high too quickly for the likes of some companies such as Fastly Incorporated. Now, the next one we're going to be looking at today is also in the share side of things, and this is on the financial sector. Wells Fargo, a well-known bank in the US, has had a bit of a tumble in the last 24 hours. We're seeing a 6% drop. Now, they gave earnings results overnight or in the US equity session, giving us an idea of where their profits were for this current quarter. Of course, they've seen a 56% drop in profit, and they're expecting income over the next couple of months to be quite soft, particularly when it's coming to interest-related income. They're seeing sour loans and a variety of other things. Now, we did also hear from Bank of America, who didn't have quite as bad a numbers, but were still negative, and they've had about a 3% drop. The one that stands out the most has really been coming from other companies such as Morgan Stanley, which might be today. We're hoping to see some better figures from there. But either way, when we look at the banking situation in the US, they've got souring loans, they have an economy that's struggling, they've got tighter lending laws than what they usually have. So it's not unexpected to see some of these poorer figures that are coming out right now. Of course, leading into the election, I'm sure this is going to have a little bit more relevance than we would normally anticipate, particularly when we've seen stocks drop on Monday, yesterday, and now we're getting it probably again tonight, depending on what we see from some of the other members, particularly on stimulus, who we've already heard from Steve Mnuchin earlier in the session. Now, looking at the news ahead, Euro Economic Summit, that is all day unscheduled announcements, so prepare for anything if you're trading the euro. Out of China, we are seeing CPI and PPI, that is your consumer price index and producer price index or purchasing producers index. So keep an eye on those. You may see them later in the session. Out of Canada, we have our ADP, non-farm employment. It's a softer scale sort of thing. There's not going to be too much around that we haven't already knowing. And of course, we're going to be seeing the Philly Fed Manufacturing Index, which will be a little bit important for the US session if you are on that. And don't forget, unemployment claims, always on a Thursday night. So keep an eye on that for the US if you are trading much later in the sessions today. Now, if you want to get in contact with me about anything in these videos, or you've got a question that you'd like to ask me personally, please feel free to shoot me an email at talk2al@acy.com. And don't forget to like and subscribe to this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.